So, this week is weekly profiles for the people that did not show up today. It'll be on the Discord and also on my YouTube channel. It'll be a long one, so please get your notes out. So weekly profiles, I have a bunch of stuff and examples that'd be very helpful if you could look at my screen. But let's get into it. So what is a weekly profile? Weekly profiles is basically how the weekly ranges are formed. So obviously, I think everyone kind of knows that the week just doesn't go straight up. We have Monday, Tuesday, Wednesday, Thursday, Friday. And each one of those days delineate different things. Like Monday, it could consolidate. Tuesday can make a low. Wednesday could keep going up. And then Thursday can go up. And Friday can go up as well. So there's a lot of different aspects when it comes to the profile of the week. And then I'll go ahead and get started with a bullish weekly profile. This is most common one. There's a ton of these, and I can tell you how to find which one. But the most basic one is when you are day trading, it's more than just a day that you need to focus on. If you plan on trading at least 3 times a week, this is a necessity to the outcome of your trades. It will basically, I promise you, it'll boost your trades. Like, I wouldn't give you guys something that wouldn't make you make more money doing this. So the weekly range is made up of an open, low, high, close, as you see to the right of my screen over here. I have it delineated within days, but we open on Monday, we trade down, we go up, and then we close somewhere over here. So this is a bullish week. This is an up close candle right here. If you want to capture the weekly range, you need to know how it forms in the first place. When implementing your 5 days of the week, it's crucial to include an economic calendar to map the week out as so. So this is a bullish week. Monday is going to start doing a false decline on a bullish week, and then Tuesday has a 70% likelihood of creating a low of week. Depending on the economic calendar, Monday can also be low of week. There's more. I have a ton of examples of this stuff, but 70% of the time, Tuesday is going to be the low of week, and then Wednesday will be kind of like an intra-week reversal where we just go up, and then there's higher time frame key level that we're going to, or liquidity. So here's an example. This is bullish, so 70% likelihood of Tuesday, if you're in a bullish run or a bullish trend, is going to be Tuesday. And if it's not formed on Tuesday, then Wednesday it would be formed on. And if it's not formed on Wednesday, be very careful. That's all I can tell you. Because if it's not formed on at least Monday, Tuesday, Wednesday, Tuesday, most, be very careful with how you go about your trades. But this is another example. This is economic calendar of that week. So if you look right here, Monday, April 28th, which is this week right here. Oh, why can't I? Oh, here we go. Perfect. We figured out how to do that. Monday, April 28th. This is Monday, April 28th, right here. News was a bank holiday, so Asia was doing nothing because that was Japan. And no other news. There might have been something. I think that was a Canadian news, but that was not going to impact ES at all. I couldn't get it all in frame, unfortunately, but there was something up here that was high impact, but it was not going to directly correlate to our ES or NASDAQ or all of our stock markets. So Tuesday, CPI 930, JOLTS job opening, bunch of medium and high impact news, aka why we get the false drop down on Tuesday when we're bullish. Tuesday drops, takes out all of this, goes to a key level, whatever that may be in your eyes. I have my own, but it goes to a key level over here, and then we rally up during Tuesday close. Wednesday comes back down, respects Tuesday's low, of course, and then continues up. Thursday slams up, and Friday continues the week all the way up there. I couldn't fit it all in frame, but we can go and look at more over here. Wednesday, high impact. Thursday, high impact. Also holidays as well. Unemployment claims, though, that's USD, so high impact. Friday, NFP, non-farm payroll. So that is a bullish week, and we can read this right here. When noting the economic events, notice how Monday is a bank holiday for the Asian session on Sunday's open. Going into Monday, there's no medium or high impact news. There is a 70% likelihood during a bullish week the low will be formed on Tuesday, if not, then Wednesday, like I stated last slide. So we're going to go into another example. Here's another example. This is trend. This is when you're in a very fast-moving trend that is very bullish. It's going to look something to this Accords. It's not always going to, let me word this right for everybody. This is not going to be You have like you have to anticipate the template. This is kind of what this is used for. If you can map out the weekly template, and I have a slide just all for that, like how to anticipate this stuff, but just let's go through all the templates first before we get to that. If you can anticipate that, then you will have a lot more confidence going in, knowing that like, all right, if I want to trade every day, I'm not saying you should do that, but if I do, I have a lot more leaning on it. If Monday doesn't have news, Tuesday does. If I know it's a bullish week, we're hovering just above or just above a key level that's going to push price up. Monday doesn't get there. So Tuesday has the volatility to get there. So what can we do? Look for signs and price action. Look how it's trading on Tuesday. You could target that on Tuesday and possibly even get the reversal on Tuesday. Most of the time it'll be on Wednesday, but it happens on Tuesday as well. And then you could trade both sides. You can trade Monday, Tuesday, and then that'll be you could be a seller Monday, Tuesday, but overall being bullish, and then being back to your bullish standpoint on Wednesday, Thursday, and Friday. I know that's like very confusing, but it really isn't. Like you'll be able to trade both sides of the marketplace and still be on side with fast moving. It's not going to be all this like high resistance when you're in a trade where it goes up, then it goes right back down. Like it'll be pretty quick when it gets there because you're trading with, some sort of coding, we'll say that. So when we're in a strong weekly trend for the monthly, trend that is bullish will look something like this. As well, note the news as well on the weeks, like in example 1. When price is trending and getting somewhere fast, like it did on the right of the PowerPoint, there is no need to come back down. We can talk about that. How would you know if it's getting there fast? Well, I have an in-depth review on that coming for the people interested, but if not, then news will be your best bet outside of technical. That's another thing we'll talk about soon. All right, example 3. This is a bearish week, and I know we're in bearish prices. We've been in bearish prices a lot this upcoming months. Here's an example of the Wednesday template forming on a bearish week. So, on a trend when we anticipate lower prices, you might be asking, how can I anticipate what profile on what day? When price is trading fast between Monday and Tuesday and stops trading on Tuesday below a key level, look at Tuesday. There is a key level for me up here, and I'm sure there's one for you up here, but I would tell you to go back in price action and look at that. Don't take my word for it, you'll see it yourself. When Tuesday arrives just below a key level, there is something over here for me, and there is something over there for you, I promise. Wednesday comes up, taps the key level, displaces all the way back down, and then Thursday, Friday are continuation days. But when price is trading fast between Monday and Tuesday and stops trading on Tuesday below a key level, that will support price going down. That's when you use your template paired with economic calendar. You have a very good understanding and confidence when price trades on Monday. So we don't need to know how it's going to react on Monday or on Tuesday and Wednesday, because yes, Tuesday has a 70% likelihood of it being high of week, unless Tuesday doesn't hit a key level that's going to support it to go down on the higher time frame. Tuesday didn't hit a key level. It was a weekly level that it hit on Wednesday. Tuesday stopped right above it. So on this template, you would have to wait to see it, but you would be going in on Monday saying, I want Tuesday to be the high of the week, but you still could be a seller on Tuesday. That's still an option. You could be a buyer as well on Tuesday. But Monday, you would know, all right, I want price to go up to this level, and then I'm going to be seller. And if you're not comfortable trading both sides of the marketplace, which I totally understand, you can still use this template to put your stop loss at. This is a huge thing. If you're trying to be a short-term or swing trader or whatever type, week-to-week basis, you can be very confident to where it's like, all right, we hit the key level on Wednesday. This is the Wednesday profile. I can put my stop on Wednesday because it should not come back to that high. And as you see, it did not come back to that high. It kept going down. So we have another thing here. All right. This is how I interpret this information to help you guys understand a little bit more about it. So on Sunday, I map out the economic events that the first thing you need to do, or you won't understand the likelihood of the high forming or the low. After that, understand the trend. Or market profile, bearish, bullish, consolidation. You guys can understand that. After you have identified that, look at where price is now on your chart. That is the most important thing. Where are we trading right now? If you don't know that, then you're not going to know where should we get to. After Sunday, so Monday, during New York, it could be during London as well. I should have added that in there. But note the key levels on a weekly basis when Monday is trading and you're watching price. Hint word, watching. You don't have to force a trade. Don't do that. Watch price at first notice where it's drawing towards like a magnet. That'll be your bias. You'll have a draw on liquidity, of course, from your own sort of technical analysis. And you would do that with your key levels. And if you're bearish, you've come to a likelihood that you are bearish and expecting lower prices, and it hits your key level on Monday, then you can trust with the economic calendar, if Monday is going to be very volatile, that can be high of week, or it could be Tuesday, or it could be Wednesday. It's not always going to be one thing. I think everyone knows trading is not one thing. Changes all the time. So you have to have things in line to where it's like it's flexible. This is very flexible. But the thing is, it's like the weekly power of three. If you can understand the dynamic of how the weekly range is made, you can capture humongous moves. Like 2 days of trading and you've made up for the other 3 type of moves. That's really the consensus of why this is very important. Or not. You can make your own decision on that, but I would honestly go and backtest it, which is what we're going to talk about on the upcoming slides. But if price fails to do so on Monday, expect Tuesday, but keep in mind Tuesday is more likelihood ranging from 70% of high of the week and low of the week, but all depends on where price is now. How did price trade? What do we do on Sunday's close? Most important thing. Questions that I would be asking if I just listened to this, and this one's going to get asked. I can already guess that people are not here. But Kai, is there a way to know what it will be on Monday or the likelihood of it forming besides just waiting so I can trade that day? As a matter of fact, there is, but guess what? Day trading is not everyday trading. Even though it's possible to do so, that doesn't mean you should. Try and do that every week. But here's how I do it. Through months upon months of backtesting, there is a way you won't guess how. The same concept applied to the individual trading sessions, Asia, New York, and London. If you don't know what those are, that's concerning. But there is a topic for another time. I can dive into that if you guys want, but that'll be something else for next week. While you digest what I just said on weekly templates, but we still got a bunch of other stuff to go over with weekly templates and some seasonals. So, your homework for this is very quick. It's 20 minutes for you guys. After this episode, this is where you write this down or go back. I'll link the PowerPoint and trading chat for you guys. After this episode, I want you guys to go in the charts and see this come to life. Delineate the days, Monday, Tuesday, Wednesday, Thursday, Friday. Mark it out. I'm not telling you to believe this. I'm simply saying to try and prove me wrong. Go and look at historical data as I've shown you and mark out the start of each new day until Friday, of course, and see how the weeks from there is a template for each week. See how the weeks form. There is a template for each week, but you must try and see reasons to why that template in your backtesting was used. Most important thing, if you trade NQ, go on NQ, do a historical week. Just click on any week. Or the best way to do it in the beginning, and I would recommend you do this, go to a bullish week. You know it's bullish. So you know you don't have to guess draw on liquidity if you're not very good at it. So you know it's a bullish week. Go look at how the days of the week impacted that whole entire week. So go look at what Monday did. Go look at what Tuesday did. Go look at what Wednesday did. And then you'll go to forexfactory.com. I've told you guys this before. You can change the dates on Forex Factory. Holy crap. I know, it's crazy. You want to study. So if you want to study 2 months ago, you can go to Forex Factory and click that red, or not red arrow, but there's an arrow that you can click and you can select any date and it'll show you that week of news. If you have any questions or would like to personally come talk to me about what I said on slide 7, how I do it, don't be hesitated to ask. And then I have some more stuff I want to go over with you guys. I'll post this, and this is kind of a rundown of a weekly. This is, you can create your own. I'm kind of like implementing you guys that you can create your own weekly template here. But those are like very, very well used a ton. But it forms differently, and I'll show you guys a little bit more on that. But I have another thing I'd like to show you. Seasonal tendencies. Yes, we talked about it. I don't know if any of you guys, I probably should have added a website to this, because I don't think anyone knows the website I use for seasonal tendencies, but it is right here, Market Bulls. I'm doing the dollar index right now. If we look, what are we in? We're in April. What did April do? Have a decline. What did we do on stocks? We declined. Isn't that crazy? May, we did it. We did a, normally this is a, we'll take the 2-year off because we want the overall like actual one, but we decline in April to May, and then going into May, we create a new high for the summer, and then June normally is a downward trending month. The 2-year one, obviously, we've had a bunch of stuff happen in the past 2 years, so I would keep that in mind. It's a little different. May, we obviously went down, but if you want to take 2 years out of 20 years, then so be it. We also have other stuff too. There's a bunch of stuff you can do with seasonals, but if everything lines up with bullish, then the seasonals are going to be on your side here. But seasonal, bullish, and coming up in this month, keep that in mind. If you're starting to see reasons to why the market's going to wanting to go higher, it's edging towards something. There's a lot of fundamentals lying on that. I'm just going to let you guys know that. And there's COT data, which I talked about this with a few of you this morning. That's also another thing. But other than that, that will be this episode, and we'll get into a little bit of questions. I don't think I've pretty much tried to cover every question I would have if I was learning this. But if you have a question, please ask. I can answer just like that. Like, it's not a problem. Type in a trading lounge. It doesn't matter. Type it in any of them. Did I? I knew I was gonna. Right. Yeah, I can show you. I can. I have to be very careful with how I word this because I know people they do different things. Like, I can talk to you personally about what I look for on my levels. The most important thing is going to be discount and premium. That's universal. No one wants to take a long when we're in a premium. No one takes shorts when we're in a discount. You want to get the ones that are in a. If we're going, so we're going up right now. I think everyone knows we've been in a very bullish couple weeks. So if we're going to maintain this bullish weeks, we're going to want to go trade to a discount to increase new buying. It's called offset accumulation. You're going to go map out. You're going to go take your fib, anchor it from here. We can get on my chart. We'll open up mine. I think I'm screen sharing. Yes, we are screen sharing. Cool. I don't know if I was screen sharing that. So we'll go to NQ, wherever that is. Where is NQ? All right. So NQ. We'll go to, I like to start with the daily and then look at the weekly, how the weekly's going. But what's our range that we're trading in? There is 2 different ranges here. We've already took out this range. This is the range we're operating in. We can go into ranges sometime. So this is our range. So what do we have underneath this 0.5 level that would still increase buying, right? So for me, I'm not saying this works for everybody, but there's an order block. I know you use those. There's a huge imbalance in here. I'm sure that's like something to the effects of like a new day opening gap or something, but we'll just note that. There's something in here as well. And then that's pretty much it. I mean, really, that's for all the discount arrays, there's just pretty much these two, and then obviously this one, but this one's not mitigated, meaning we've already digged into this. Like this is the main one. But then you can go to a weekly and then look. All right, so what do we have on a weekly? So our weekly range, because the weekly is very, very volatile. If you click on something, so we're bullish. Last down close candle, there's two. Well, which you use. I would honestly use this one. You could use that one. That's fine. But there's our weekly. So where could we draw to on the weekly and also on the daily? We haven't. Oh, we have tapped it. I think we did already tap it, but that doesn't mean like you want them to be mitigated, but they can be tapped as well. Like that's fine. And this is a weekly one, so you have to leave some room. But we could dig into this weekly one, and if you want to grade it, no, this is the weekly. This is the weekly order block for NQ. Yeah. So this whole area can be used in here. And what's in this area? We have, and it can wick down here too. You have to leave room. Wicks do the damage, bodies tell the stories. It's the biggest narrative I can tell anyone. Wicks do the damage. It doesn't matter what a wicks kill everybody. Like it's just the bodies are the main part of the story. If the body is closing and respecting it, the wicks are like it doesn't matter what the wicks do. Yes, they stop people out. Yes, they can stop you out of your trade. But if the bodies are hitting that level perfectly, staying above that level, the wicks are just grabbing as much liquidity as they can so they can push price back up